You know, in the wild world of options, there's this one little number that, believe it or not, tells you pretty much everything you need to know. It's the secret key to predicting price changes. And today, we're going to decode it. We're talking about option delta.
Look, every single person who's ever traded an option, whether you're just starting out or you've been doing this for years, has this one question constantly running through their head. If my stock moves up a buck or down a buck, what's that actually going to do to my options price, right? How much am I really going to make or lose?
Well, guess what? The answer to that million-dollar question is right here. It's a little thing called option delta. Think of delta as your go-to tool, your secret weapon for figuring out which way your option is leaning and exactly how much its price is expected to change. It's going to be the star of our show today.
All right, let's dive right in. First up, we're going to break down what option delta really is and why we call it the ultimate tool for measuring directional risk. Okay, so at its very core, delta is just a super simple ratio. Here it is. A $1 move in the stock equals a delta-sized move in your option. That's it. That's the whole relationship in a nutshell. A $1 stock move equals a delta-sized option move. We're going to keep coming back to that.
Now, this is where it gets kind of cool because delta has this split personality. For call options, the ones you buy when you think the stock's going up, they always have a positive delta. They move with the stock. But for put options, the ones that make money when a stock falls, they always have a negative delta. They move against the stock. Just that little plus or minus sign tells you the entire story of which direction your option is headed.
Okay, so theory is one thing, but seeing how the numbers actually move is where it all clicks. So for this next part, let's jump into some real examples and bring this concept to life.
All right, check this out. Let's say you've got a call option and you paid $5 for it. Its delta is a positive 0.75. Now, the stock suddenly jumps up by $1. What happens? Well, you just add that delta to your option's price. Your $5 option is now expected to be worth $5.75. See? Super straightforward.
Okay, now let's look at the other side of the coin with a put option. Imagine your put is worth $3 and its delta is negative 0.25. So if the stock goes up by that same dollar, the put does the exact opposite, right? It's expected to lose 25 cents. Your $3 option is now looking at a price of $2.75.
And this is so important because it shows it's not just about positive or negative. The size of the delta matters big time. For the same exact $1 stock move, an option with a big beefy delta, like 0.80, is going to jump 80 cents. But another option with a tiny delta, like 0.20, it's only going to move a measly 20 cents. Huge difference.
So here's the bottom line. The closer that delta gets to a full 1 or negative 1, the more your option is going to act like a carbon copy of the stock itself. A higher delta just means a bigger price swing for you, more bang for your buck every single time the stock moves.
So you might be wondering, where do these delta numbers even come from? Are they just random? Nope, not at all. They are completely tied to where the option strike price is compared to the actual stock price. In options, just like in real estate, it's all about location, location, location.
So here's the breakdown. If your option is at the money, meaning the strike price is pretty much the same as the stock price, its delta is going to be hanging out right around 0.50. Now, if your option is deep in the money, meaning it's already a winner, its delta gets closer and closer to a full 1.0. And on the flip side, if it's far out of the money, a total long shot, the delta gets tiny, approaching 0.
Okay, now we get to my absolute favorite part of delta. Because it's not just about predicting price changes. No. It has this secret second identity, a hidden meaning that is just so incredibly useful. And honestly, this is the real aha moment.
So let's go back to that 0.75 delta. We know it means a 75-cent price change, but what else is it trying to tell us? What's the real story behind that number? Here it is. That 0.75 delta is also telling you there's roughly a 75% chance that your option will expire in the money. All you have to do is move the decimal 0.2 places. A 0.75 delta is like a 75% probability. It's that easy. Mind-blowing, right?
And this, right here, is a total game changer. Suddenly, that little number on your screen isn't just about money. It's about probability. It's a super fast, back-of-the-napkin way to see what the market thinks the odds of success are for that trade.
Let's do a quick fire round. You see a call with a 0.60 delta? Boom. That's about a 60% chance of expiring in the money. A put with a negative 0.30 delta? For this, just ignore the minus sign. That's about a 30% chance. What about a put with a negative 0.85 delta?
Yeah, that's a whopping 85% chance of being profitable at expiration. See how fast that is?
And this is what closes the loop. Remember how we said at-the-money options have a delta around 0.50? Well, now it makes perfect sense. It's because the market sees them as a coin flip, a 50-50 shot of winning. And the delta shows you that probability, plain as day.
Okay, last thing. Let's make sure you can talk the talk. Traders have a special kind of shorthand when they discuss delta, and once you get it, you'll sound like a pro.
So, you might hear a trader on TV or in a chat room say something like this: "I'm thinking of selling the 30 delta put." They don't say 0.30. That's too slow. They just say 30 delta.
So here's your cheat sheet. When a trader says a 50 delta call, what they really mean is a call with a delta of plus 0.50. If they say a 30 delta put, they're talking about a put with a delta of minus 0.30. They just get rid of the 0 point, and you're supposed to know the negative sign is implied for puts. It's all about speed.
Now, just a quick reality check here. Delta is an absolutely fantastic tool, but you've got to remember it's an estimate. It's a snapshot in time. The moment the stock moves or time passes, that delta is going to change. So think of it as a powerful guide, not a crystal ball.
So let's wrap this all up. This is your Delta decoder ring. Number 1, it predicts the price change for a $1 stock move. 2, positive for calls, negative for puts. That tells you the direction. 3, it's a quick and dirty proxy for probability. And 4, 30 delta just means a delta of 0.30. That's the whole story.
So I'll leave you with this question. The next time you pull up an options chain, are you just going to see a bunch of prices? Or are you going to see something deeper? Are you going to see a map of probabilities, of risk, of potential, all packed into that one little number we call delta?